ABN Amro's fourth quarter net income hit the tape. It missed the lowest of estimates. The state-controlled Dutch bank saw compliance costs and write-downs weighing on the profit. To discuss the numbers, we have the CFO, Clifford Abrahams. He joins Nera and I. Clifford, I go straight to your dividend, the dividend news that you've given to the market this morning. And what I want to understand from you is obviously a cut in the dividend. Do you now have to lay aside the ambition to raise the nominal dividend? Do you need to drop that commitment now as one of those litmus moments in the dividend story at the bank?
Look, we don't have such a commitment to raise the nominal dividend in dividends in euros per share. Our commitment is to a payout policy. So each year we pay out a minimum of 50% of our profit. This year we're proposing to pay out 62% of profit. That's in line with last year. So we're maintaining our payout ratio. As you say, that means dividends per share coming down a little bit because our profits are down a little bit. We think a payout ratio is the best way to manage dividends in a bank because it ensures our flexibility and it means we remain robust from a capital perspective through different economic conditions.
Clifford, good to speak to you this morning. On top of that, the cost-to-income ratio has risen. What can you tell the market about how you'll manage that?
Yeah, cost-income ratio is tough right now for banks across Europe. Income's very much under pressure, reflecting low rates, us included. We've decided earlier this year to pass on negative rates to our largest savers, and that will safeguard the top line. But we're also working very hard to be disciplined on our costs. So while we're putting more and more resources into regulatory and detecting financial crime matters, we're also making good progress on our cost-saving programs, and we've given an update today regarding the future potential of these.
Clifford, you talk about having to charge now to clients. Give me a sense, do you expect there to be a flight of deposits out? Can you put some numbers around that charging process, the consequences that you've modelled for in terms of defending the top line and potentially the risk of deposits?
Yeah, so here at ABN Amro, we have a large private bank, so many of our clients have really very large balances here at the bank. And for those clients with more than 2.5 million with the bank, we're passing on the cost of 50 basis points per year. We pay 50 basis points to the ECB and we're passing that on to those savers. Now, what we've seen across the market here in the Netherlands is other banks also passing on negative rates for very large savers. So we feel confident that we can retain those clients. They're important clients for the bank. We want to maintain the relationship, but we need to be fair to all our clients. So we don't expect a big outflow of deposits, given that's what other banks are adopting similar policies. And 50 basis points on balances of around 30 billion, which is how much those large savers have with us, is around 150 million euros per annum. So that's a meaningful amount in terms of safeguarding the top line to the bank during this difficult period.
Yeah, and during this difficult period, Clifford, I understand that you're trying to manage all the three things that we've talked about. But if push really comes to shove, what are you going to prioritise in protecting? Is it the dividend ratio? Is it cost cutting? Or is it the impact on depositors?
Yeah, so as a bank, we play an important role in society. So what's critical for us is that we safeguard the capital position of the bank. That's important to all our stakeholders, our clients, during all economic circumstances. And here at ABN AMRO, we're really very strong. We have a very robust balance sheet, 18% CET1 ratio. So we're feeling really quite comfortable from a capital point of view. I think beyond that, our primary key performance indicator is return on equity. It's really important for ABN AMRO and for banks around Europe to have strong return on equity because that's what we use to pay dividends. dividends, to grow our business, and to maintain our capital position. And in 2019, we posted a return on equity of 10%, which is within our target range of 10 to 13%. So it's at the low end, reflecting those tough economic conditions. But we're really quite pleased when you look across Europe at other banks, 10% is looking really quite good given the circumstances.
Clifford, regulation, compliance, it'll get us all in the end, won't it? And the Dutch finance minister warned that Dutch bankers were in for a rude awakening. The regulators were gaining the upper hand, excuse me. Can you give us any indication in terms of investigations and regulation, in terms of the financial costs to ABN? I know that you had a recent settlement in the United States of America, but can you give us some guidance on that?
Yeah, that settlement in the US was a relatively small amount in dollars. We are very focused on regulatory matters. It's important that we run the bank in a safe way. So that's balance sheet safety, but also do the right things for our clients and society. So we're very clear here at ABN Amro that we need to comply, and we need to do that well. In terms of finances and resources, we've said today that we spent around 400 million euros on detecting financial crime activity in 2019. We expect that overall amount in terms of euros to be roughly stable in 2020 and come down modestly after that. We have over 2,000 of our staff focused on detecting financial crime activities. We have around 20,000 staff here across the group. So you can see a major commitment to ensuring the safety of the bank, and for us to ensure that we're fully compliant and do what we need to do to ensure the system is safe, and we'll continue to do that.
Yep.
At the same time, as I mentioned, we're making really good progress on our cost-saving measures, and the two will offset each other.